I think the Ukraine situation adds to this. It's another layer that makes it even more tricky to slam the brakes on this economy.
The situation is very volatile. It evolves by the day.
There are still a wide variety of sanctions that haven't been used. And frankly speaking, I think we've been too timid. We need to move much more quickly.
I don't think China has an interest in seeing the conflict continue.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, March 18th. Our top stories today. Russia fires a salvo of missiles targeted at areas in western Ukraine, not far from corridors used by Ukrainians trying to flee the fighting. We'll have an exclusive interview on the war and the peace talks with one of President Zelensky's top advisors. If the war drags on, Vladimir Putin may threaten to go nuclear. That is the assessment of the U.S. military intelligence experts. Meanwhile, President Biden will try to persuade Xi Jinping to pressure Russia to end the war. And the cost of insuring Russian debt against default drops and bond prices rise. Money earmarked for interest payments on Moscow's dollar debt has now been sent to Citi. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. So, Kailey, the international dimensions on war in Ukraine really taking centre stage, I suppose. The role of China certainly is going to be key today.
Absolutely, as we await that conversation between Xi Jinping and President Biden. Now, speaking of China, you saw some losing of the momentum we have seen over the last 2 days in Chinese and Hong Kong equity markets. Of course, there was a lot of optimism on Wednesday and Thursday about the promises, the verbal promises Beijing made. Now the question is, will they follow that through with actual action? So a cooling of the rally in Asia. The MSCI Asia Pacific Index was essentially flat on the day. Hong Kong tech stocks in particular, what I wanted to point to, because the Hang Seng Technology Index was up 32% over Wednesday and Thursday. On this Friday, though, ending the day lower by nearly 2 percentage points, though that was well off of session lows. At one point, it was down 6%. Now, in the bond market, you're continuing to see inflationary pressures pushing up yields. That was true in Australia, where the 10-year yield rose by around 7 basis points, and at 258 or so, that is the highest going back to December of 2018. Finally, of course, we also got the BOJ decision out overnight. Kuroda not worried about inflation. He sees absolutely no reason for the BOJ to raise rates just because other central banks are. He also talked about the Japanese yen, saying it's more about dollar strength than yen weakness at this point. Once again, after that decision, the yen is weaker. Right now, trading just south of 119 to the dollar. That is the weakest level going all the way back to February of 2016.
Yeah, really interesting to watch that dollar-yen weakness. We're looking at some weakness in U.S. markets here ahead of the open. Just a little bit of risk off everywhere you look. So S&P futures down about 0.5%. That should be no surprise after the 1% plus gain we had yesterday, 2% plus on Wednesday, 2% plus on Tuesday. So we've really come back over the last few trading sessions. The 10-year yield down just a little bit as investors buy that debt to spot 1566, so at a relatively high level still. NYMEX crude, speaking of a relatively high level, and climbing 103.85 for Texas Intermediate, and Bitcoin coming off just 1/3% and still holding over $40,000 at 40,580. Anna, what are you seeing in terms of European moves?
Yeah, a little lackluster here on the European session then, Matt. We have moves to the downside on some of the major markets here in Europe. The FTSE, the CAC and the DAX all moving lower. The DAX and the CAC in particular weighed down by the auto sector, which we can roll on and show you is looking a little bit weaker in this morning's session. So some of the suppliers to the auto industry, the likes of Michelin over in France, and some of the big auto manufacturers, Renault, BMW, Mercedes, all of those trading considerably weaker today. So that is a weight on the European equity session. Matt had in WTI, I've got Brent here, 107.02. We're off highs that we touched earlier on in the session. We were up by a few percentage points earlier on during the Asian session on this oil price. And it is the strength that we've seen returning to the oil price that has got some a little jittery and reduced risk appetite, although we saw US equities make gains despite higher energy prices in yesterday's session. Talking of risk off, that's driven the euro a little lower and the dollar to the upside. We've talked about the dollar already. Here's the euro side, 110.69, down by 0.2%. To what extent does that actually help European exporters? That's very much at the margin, perhaps. But are we going to see geopolitics continue to weigh on the European currency? And will that continue to be something we trade around? And this is the nickel price. 12% is now the down limit on the LME. But another day of difficulties in trying to get these trades through. Another day of glitches, essentially. So it wasn't supposed to go down by more than 12%, but a few trades did manage to cross at lower than 12% to the downside, and so those are going to be cancelled. So another day highlighting the difficulties that the LME has had in getting this market back up and running, Kailey. But I suppose on the upside, the fact that we are seeing these substantial moves to the downside does suggest that the short squeeze that had caused all this problem in the first place may be being unwound a little bit here.
Yeah, I guess that's the good news, Anna. The bad news is evidently the third time is not the charm for the LME. So a lot going on already today, but there is more ahead. The UK Conservative Party's two-day conference will start in Blackpool. Also for the equity market here in the U.S., it is triple witching day. It's the once in a quarter expiration of options and futures, along with the rebalancing and reconstitution of major indexes, so could mean a lot of volume and a lot of volatility. We'll also get the Bank of Russia's rate decision at 6:30 a.m. New York time. That will be interesting in light of this current state of the Russian economy. And finally, of course, President Biden speaking with Chinese President Xi Jinping. Biden is set to warn that the U.S. will impose costs if China backs Russia, Matt.
All right, that is going to be an interesting conversation for sure. Russian missiles have hit areas in the far west of Ukraine again. As Anna was saying, the war shows no signs of easing up, and the humanitarian situation is worsening as well. One of President Zelensky's top advisors spoke to us exclusively this morning.
The talks continue. Unfortunately, the progress is not that fast as one could have expected. And definitely, right you are, any talks ideally should take place in the terms of ceasefire, which is not the case currently.
Let's get more with our reporters from around the world. In Brussels, we have Maria Tadeo and Medica, Poland. We have Aggie Cantrell in Washington. We have Emily Wilkins in London. We have Danny Berger. We'll start off with you, Maria, after that exclusive interview with Ihor Zofka, one of President Zelensky's top advisors. What else did he tell you?
Well, Matt, you play that clip there. He says the talks continue, but they're not going fast enough. And then he also made it clear to me that for Ukraine, this will only become a serious negotiation when the ceasefire is finally implemented. He reminded me that yesterday, of course, the city of Mariupol, remember, this connects Crimea to the Donbass, was shelled again. And this morning, Lviv was shelled in the early hours of the day. The other thing, Matt, that was very interesting from this conversation is that he told me everything that we've seen published in the international media for the past 3-4 days. This is the Russian narrative. It's not our talking points. This is what Russia wants you to believe will be in the final deal. But we do not see this as the way or the beginning of a compromise. We want to push for our own demands. And he told me when it comes to security guarantees, we do not look at Finland. We do not look at Sweden. We don't even look at Austria. We want to create our own Ukrainian model. And that means this just won't be a bilateral deal between Ukraine and Russia. We want to get the European Union, the United States, but also possibly Turkey to join in this peace deal if there is to be a peace deal in the near future in Ukraine. So making it very clear, they do not see this as a Russian-Ukrainian bilateral issue.
Yes, you've certainly been mentioning Turkey a little bit this week, Maria, and we'll keep an eye on their role. Maria Tadeo in Brussels. We'll have much more of that exclusive conversation with the Ukrainian president, Deputy Chief of Staff, later on in this hour. Let's get to Bloomberg's Aggie Cantrell, who joins us now from the Polish-Ukrainian border. We're seeing lines cross from Sergei Lavrov, the foreign minister of Russia, saying that any weapons cargo to Ukraine is, quote-unquote, fair game for Russia. This, of course, coming on the back of the intensified bombing of the west of Ukraine. We haven't seen this all that much during this campaign so far, during this war so far, have we, Aggie? But now Lviv being targeted.
Yes, so the targets that have hit Lviv this morning and had done so on Sunday last week, what's really a concern for people here is that Lviv is essentially is an essential artery between the parts of Ukraine that are dealing with the bulk of the fighting and the European Union. It's very close to where I am here in Poland. A lot of the refugees who I speak to who fled the fighting in other parts of the country have gone through Lviv, have gone through that station, that main train station in Lviv to get to Poland and to other European nations. And then on the flip side, the other way, you're seeing a lot of the people here who are providing humanitarian aid to Ukraine, a lot of the trucks that are traveling into Ukraine to provide humanitarian aid to the people on the ground there, those trucks are also traveling through Lviv as this key point before they go into the conflict zone.
All right, Aggie, thanks so much for joining us. Aggie Cantrell there on the Polish-Ukrainian border. Now, taking a look at the call that we're all waiting for later on today. U.S. intelligence experts warn that Vladimir Putin is likely to make threats to use nuclear weapons. Let's get more with Emily Wilkins, Bloomberg government reporter out of Washington, D.C. Emily?
Yeah, this is a new report and intelligence that we're seeing from the Pentagon that suggests that as this invasion continues, as Russia is hit with these sanctions, as this invasion has gone on much longer than they thought it was going to, that Putin might start threatening nuclear war as a way of showing both his allies and his enemies that he is trying to still operate from a position of strength. And that is something certainly to be keeping an eye on as things go forward. Obviously, though, the big news of today is going to be that call between President Biden and President Xi, where Biden's really going to have to convince President Xi to back off and to stay away from this conflict and from assisting Russia.
Well, on that point, Emily, we heard from the White House Press Secretary Jen Psaki about China's role in this conflict yesterday. Just take a listen to what she had to say.
This is an opportunity for President Biden to assess where President Xi stands. There's been, of course, rhetorical support or the absence of clear rhetoric and denunciation, or the absence of denunciation by China of what Russia is doing. So the fact that China has not denounced what Russia is doing in and of itself speaks volumes. And it also speaks volumes not only in Russia or in Ukraine, but around the world.
So, Emily, I guess the question is, what tangible can come from this conversation today?
Well, I think the hope is that if the U.S. is going to come in with a message to Beijing and to Xi that if they do support Russia, they will also be hit with sanctions, that it's going to be enough to make Xi sort of back off on any potential requests for either helping Russia with military aid or with trying to help Russia get around some of the sanctions, relieve some of the pain that Moscow is currently feeling on that. I mean, it's going to be a bit of a difficult dance. I mean, relationships between the U.S. and China are not particularly warm right now, but so far China's been having very careful messaging when it comes to Ukraine and Russia. They're kind of straddling the line right now. The goal for the Biden administration today is to make sure that China does not wind up supporting and aiding Moscow in their invasion of Ukraine.
Yeah, it seems some of the diplomatic correspondence that Bloomberg has seen shows that U.S. officials really lack clarity on China's true intentions. So I'm sure trying to get a handle on that will be useful. Emily, thank you so much. Emily Wilkins of Bloomberg Government in Washington. Now, there's optimism that Russia's bond payments may be settled in dollars. We've seen CDS markets responding to that. Sources say that JP Morgan has processed the funds and sent the money on to Citigroup. Bondholders, though, are still waiting to receive the $117 million. Bloomberg's Danny Berger joins us with more. So we trace the money from Russia to JP Morgan to Citi, and then we wait for it to get to its final destination, I guess, Danny.
Exactly. Look, you know that there's stress in the system where all of a sudden the back offices are thrust into the spotlight. So JP Morgan, they're the correspondent bank. That's why Russia would have sent them the interest payment. And then Citi is the payment agent. So it goes to them, as you say, to pay eventually bond holders. Now, that's as far as we know as the money has gone. Of course, the most, if not one of the most crucial parts of bond interest payments is that it gets to the bond holders. There has been some Reuters reports that some have received payments, but again, that's not something we are able to confirm at this time. Now, despite that uncertainty, the market has taken it as a positive that sanctions won't hold back from Russia paying off these bonds and paying in dollars. The cost of protecting Russian debt against a default has plummeted from its high on Monday, still elevated compared to history, but nonetheless has fallen. Of course, there's still so many questions to be answered here. Of course, this big one, will people actually get the money if they're a bondholder? And in the past, Citi has canceled corporate interest payments, according to reports. One Russian steel company going so far as saying they don't think Citi will. S&P downgrading Russia because of this plumbing issue, saying if the funds are not accessible or if a payment is made in a currency not stipulated in the terms, we believe that an investor does not agree to the alternative payment. We could deem this a default, Kailey.
All right, so we have some answers, but still a lot of questions that we don't have answers to. Thank you so much to Bloomberg's Danny Berger. Now let's look at some stocks moving in pre-market trading here in the U.S. The first one I want to point out, GameStop, the original meme stock of 2021. It is actually plunging to the downside in early hours, down by about 6.5% after reporting a loss of $1.86 a share. Analysts were looking for a profit of 84 cents a share, so clearly a wide gap there. In other news, though, the company is launching an NFT marketplace in the second quarter, but that clearly isn't aiding optimism this morning. Another stock moving to the downside is U.S. Steel. Its forecast missed expectations. The two issues here, prices are down from the highs of last year, and demand early in the year is also not strong. So that stock is down by about 2%. One mover to the upside, though, Moderna. It has requested FDA authorization for a fourth dose or a second booster for all adults for its COVID vaccine. That goes a lot farther than Pfizer, which only asked for that fourth shot authorized for over 65. So that stock is up 1.5% before the bell, Anna.
Kailey, coming up on the program then, more on Ukraine with Cyrille Bret, the Jacques Delors Institute lecturer, giving us his thoughts on where we head in the short term and the longer term in the war in Ukraine, and the risk of a Russian default. It seems to be falling. We will discuss that with Althea Spinozzi, Saxo Bank senior fixed income strategist. If we did see a default, if it wasn't paid in the right currency, would there be spillover effects into other bond markets? Plus, his firm achieved a 76% return its first year by focusing on block trading. Now, Frank Fu is said to be caught up in a probe of Morgan Stanley. You can check out the latest in our Big Take story by typing NI Big Take on the terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kailey Leinz here in New York, Anna Edwards with us out of London. I want to take a look at a really great chart that was put together by my friend Kriti Gupta, Bloomberg Markets correspondent. And for those of you on radio, I will just tell you it outlines financial conditions and the commodity price shocks that we've seen preceding, big dips in GDP growth, recessions. Let's get over to Kriti right now. She put this together as her chart of the day, which you can get. How do we get chart of the day? How can we subscribe to that?
You can find it on the terminal. You can tune to Surveillance. You can follow me on Twitter. You can email me. There's a million ways. Send up a smoke signal. I'll catch it.
I follow her on Twitter as well. So, all right, what are we taking from this? Because we do see the oil price coming back up. Futures are down today, but we've had an incredible rally over the last few days in risk assets as the oil price came down.
Yeah, well, this is kind of a warning chart. This is a little bit bearish in some views, because the idea here is that, sure, you are seeing a stock rebound, but we're looking at financial conditions, which is a different story. You do see those commodity shocks throughout history. They tend to last a while, and you see a lot of the rhetoric coming out of especially oil experts who say getting Russian supply off the market, getting this U.S. ramp up, demand isn't slowing down anytime soon. So this commodity shock, whether it's in oil, whether it's in food prices, it's likely to stick around, even though you did see oil kind of come down from that, I think, 140 level not too long ago. What's important to keep in mind, though, is that historically, commodity shocks hit those conditions far before recessions do. So as we talk about whether demand destruction is going to kind of plunge the economy into recession, consider the commodity shocks first, because it's not necessarily going to result in recession, but it could result in a little bit of tightening.
Well, and obviously the Fed wants conditions to get tighter, so in some ways the market already has done some work for the Fed. 2 days post-decision, does it look like the market believes what the Fed is trying to sell? Is it buying it?
I think it is buying it, but remember, there's a really great quote coming from Stephen Englander where he said that this is kind of dating without commitment, especially when you're talking about the Fed. And also remember, going into the first quarter of 2022, before we had any prediction of a war in Ukraine, the consensus was that you were going to see an extremely volatile first quarter, and that volatility would end the minute you got that first hike from the Federal Reserve. So in some ways, this was kind of destined to bounce back just a little bit. The question is, does it stick? And I think right now, to your point, Kailey, people are saying, well, yeah, we do actually buy this, because right now inflation is the bigger problem rather than a tighter Federal Reserve. That being said, they can very easily change their mind, and their hawkish forecast doesn't have to stay a hawkish forecast.
Right, and some people pointing to ongoing moves to the upside in break-even inflation expectations and saying maybe that means that some doubt whether the Fed can really get on top of this. We will watch. Kriti, thank you so much. Bloomberg's Kriti Gupta with the latest on markets. For more market analysis, check out MLIV Go. That is the function to use on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Dr. Anthony Fauci warns that the U.S. could soon see coronavirus cases rise again, and he says vulnerable people are likely to need a fourth vaccine dose. The government's infectious diseases chief tells Bloomberg a case spike in the U.K. is likely to happen in the U.S. In China, President Xi Jinping has pledged to reduce the economic impact of his COVID fighting measures. That signals a shift in strategy that has minimized fatalities but weighed heavily on the world's second largest economy. Meanwhile, the technology hub of Shenzhen is easing its lockdown and will allow factories and public transport in the part of the city to resume operations. Coming up, we will talk about China in a different lens, its role in the Ukraine crisis. Cyrille Bret, lecturer at CIESPO and researcher at Jacques Delors Institute, joins us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. One of the top advisors to Ukraine's President Zelensky says that peace talks with Russia are progressing slowly. Ihor Zovka tells Bloomberg that Ukraine needs hard security guarantees in any deal. He said one of those could be membership of the European Union. U.S. intelligence experts warn that Vladimir Putin is likely to make threats to use nuclear weapons if Russia's invasion of Ukraine drags on. That's part of a summary of worldwide threats from the Defense Intelligence Agency. Meanwhile, President Biden will try to persuade China's Xi Jinping to pressure Russia to end the war. The cost of insuring Russian debt against defaults dropped and bond prices rose. Bloomberg's learned that funds earmarked for interest payments on the Russian government's dollar notes were sent to the payment agent. Bondholders are, though, still waiting to receive the $117 million. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, after what has been an incredibly volatile week driven by the geopolitics, the Fed and also policy in China, things looking a little calmer today.
Yeah, well, I mean, it's been a great week if you're long risk assets, right? Because we've had stocks just roaring back. The S&P before Tuesday was down 14%, and it is now down 7% year to date. The futures are down today, but after three rallies in a row, that's understandable. Investors are buying a little bit of the 10-year debt. That pushes the yield down, but still at a relatively high level of 2.1512. We also see oil coming back above $100 a barrel. TI trading for $103.69 right now. So a gain, but only 0.7%. Nothing compared to the big rally that we saw in oil yesterday. And Bitcoin is off a little bit, just about 1/3 of 1%, but still holding over 40,000 at 40,569. Kailey, what do you see in terms of pre-market movers?
Well, what's interesting, Matt, is the loss for Bitcoin isn't all that great, but you're seeing a little bit more movement when it comes to some crypto-related equities in early hours. The likes of Marathon Digital, Riot Blockchain down 2.5% to 3% respectively, so underperforming the underlying cryptocurrency. Another stock I wanted to point to, GameStop, the original meme stock, reported earnings after the bell, and I shouldn't say earnings. Actually, it was a loss, a lot greater loss than analysts were anticipating. They were looking for an 84-cent profit. In other news, though, and this is kind of back related to cryptocurrencies and digital assets, GameStop is going to launch an NFT marketplace sometime in the second quarter. Finally, I wanted to point out FedEx. It fell about 3% in after-hours trading after its earnings. It's not yet trading in pre-market, but pay attention to it when those trades do begin because its profit also came up short of expectations. On the one hand, volumes were subdued early in the year because of the Omicron variant, and on the other hand, rising labor costs. So that is creating quite a struggle for the company's pricing.
Yeah, we were actually watching for some read across from FedEx into postal mail delivery companies here in Europe. We didn't see too much of it, but we will watch for that, Kailey. In terms of the European picture, just to the downside, just a touch, to Matt's point, not the volatile moves that we're seeing that we saw earlier on in the week. And of course, we've made gains over the last few days or so. So the week as a whole looking pretty positive from a stocks to the upside perspective. The auto sector is certainly a big weight on European stocks today. That sector down by 1.7%. That typically hurts the French market. It hurts the German market, where many of those businesses are listed. The Brent crude price, just adding to what Matt said there about the sort of small scale of moves we're seeing in oil prices today, 0.7% again here on Brent crude, just as we saw on WTI. And nickel prices dropped to their limit down, 12% lower on the LME when we saw for a third day glitches, difficulties getting trading to start once again. So we have seen that ongoing technical challenge. Some trades actually crossed below that limit down price. They, we understand, are going to be counted cancelled. But it does suggest that we are seeing some of that short squeeze unwinding, the fact that we're seeing such downward pressure on nickel prices right now, Matt.
All right, we're definitely watching those nickel prices very closely. Some people really lost out on those canceled trades. We have breaking news out of the Kremlin saying that Vladimir Putin told German Chancellor Olaf Scholz that Ukraine is trying to stall talks earlier this morning. We did hear, though, that Putin says Russia will continue those talks, which I think is the most important part of that readout. Russia is going to continue those talks on Ukraine. Earlier this morning, Maria Tadeo spoke exclusively with one of President Zelensky's top advisors, Ihor Zovka.
Currently, and for the time being, as we speak, the talks continue. Unfortunately, the progress is not that fast as one could have expected. And definitely, right, you are. Any talks ideally should take place in the terms of ceasefire, which is not the case currently. Obviously, during the talks, Ukraine will raise the issue not only of ceasefire, but of withdrawal of troops. And the rest issues should also be discussed. So I will not reveal you all the details, and would like to pay your attention that any leaks to the foreign media, whatever, are not true. So they might be of Russian narrative. The talks are continue, but you have to understand that the final talks should be carried out on the level of presidents.
So essentially, the real talks will only begin when there's a ceasefire in place. That's essentially what it is, right?
Absolutely. If you have the serious diplomatic talks, you immediately implement the ceasefire. Just to remind you, when they started the first round of negotiations on the level of delegations, they promised to have a ceasefire. That was not the case during first, second, third, and already fourth round of negotiations. Yes, ceasefire should be implemented immediately.
And sir, of course, there has been a lot of debate around NATO membership, EU membership. So what is the latest on this? Because the impression that some in the West now have is that Ukraine has completely given up on the NATO membership, but you want to be a member of the European Union. So just to make it very clear, if you pass on NATO membership, does it mean that you need a European Union membership? You need one if you lose the other.
Well, we're a realistic country. We do understand the position of NATO. By the way, it was the case even before the war. NATO is not ready to accept Ukraine as a member. NATO is not helping. NATO as an institution is not helping today to fight Ukraine, for Ukraine to fight against Russian aggressor. It doesn't close the sky, etc. So being realistic, we understand that if currently this is not the case, we need the other security guarantees. One of the security guarantees is for Ukraine to become a full-fledged member of the European Union. That's why my president summoned an application for Ukraine to become a member to the European Union more than 2 weeks ago. Unfortunately, the procedures just only started. We need a swift procedure for Ukraine not to lose its time in the bureaucratic procedures and routines. So that's why we're now hardly talking with the European Union, with the European Commission to practically process the application of Ukraine. Yes, it would be a very good guarantee for our secure future.
The other big country in this is China. I do have to ask you, do you worry about China helping Russia militarily to further strengthen their campaign in Ukraine?
I think China is a wise country. They will not do this. But yes, the role of China in this settlement is very important.
So your message is this fight is essentially between the Ukrainian and the Russian army. No one else should get involved here.
No, it's the fight against Russian army and Ukrainian army, but Ukraine is fighting for the world. So all the world should be involved in bringing peace to Ukraine.
That was Bloomberg's Maria Tadeo speaking with Ihor Zovka, the deputy head of the Office of the President of Ukraine. Joining us now for more is Cyrille Bret, lecturer at Sciences Po and researcher at the Jacques Delors Institute. Cyrille, let's first talk about the talks, because, of course, that headline just crossing that Putin told Olaf Scholz that Ukraine was trying to stall them. How much longer can this war go on before either Ukraine or Russia is ready to settle?
I'm afraid it will take a very long time. And we have to be very careful on that, because the Russians see negotiations is not exclusive of fightings and combats. To them, from the Moscow point of view, negotiations and invasion are complementary. Military action serves the purpose of negotiators to give them the high ground, to exert pressure on Ukraine in order to obtain more concessions. The way Ukraine sees it is completely different, completely at the opposite side. A ceasefire is to be the first step, and then negotiations in order to obtain what's been said by the advisor to the Ukrainian president, withdrawal of the troops, and then talks on the security guarantees.
Yes, so different preconditions to talks, perhaps, as you set out there, Cyrille. Good morning to you. Let me ask you about what kind of security guarantee EU membership would bring with it. We heard there the Ukrainian official talking about how if they can't have NATO membership, they're realistic about that, but they still want to have EU membership then in that case as some sort of security guarantee. What kind of security guarantee would that add up to?
Let me be very blunt. None at all. The European Union is not a military alliance, is not an integrated military organization as NATO is. This is the biggest on the world stage. European Union is not a military, is not a strategic organization. It's dedicated to law, to business, to guarantee to the citizens. And if on the symbolic level, it would be a major step for Ukraine. It cannot be the solution to the invasion. It could have been before the invasion. It could have a kind of a leverage for deterrence on Russia, but it's no longer the case. It's too late. It's too late. What Ukraine needs is not EU membership. It's weapons. Only that.
Well, planes specifically, right? I wonder what you think about the Defense Intelligence Agency report, the U.S. Defense Intelligence Agency coming out and saying, as Vladimir Putin, as Russia has a more difficult time, gets mired down in Ukraine, as economic sanctions hit harder, Russia faces a huge depression, and this heightens the threat of Vladimir Putin using nuclear weapons.
They could not be more right. Of course, of course. And it's been the case from the outset of the invasion. Remember the press releases. Remember the press talks by President Putin. Of course, the classical, the conventional invasion of Ukraine is put under the umbrella of the nuclear threat from the outset. And at the beginning, Russia thought that Ukrainian resistance would not be that tough and that victory was at hand. And now victory will come, probably, most probably, but at a very, very high cost for the Russians, for the Ukrainian civilians. And if Russia is put in a dead end, of course, the tactical use of nuclear weapons will be on the table in Russia. Of course.
Cyrille, just quickly, in about 30 seconds, obviously, President Biden is going to speak with Xi Jinping later on today. Where do you think China will come down on this?
No. China as an owner's broker, I don't believe it. Or it will be at a very high price for the US, for the European Union, and for Russia as well, because China has never played that role on the international stage for the time being. They don't know how to do it, and I don't see their interest in it.
All right, Cyrille Bret, thank you so much for joining us, lecturer at Sciences Po and researcher at the Jacques Delors Institute. We appreciate your time. Now coming up, Althea Spinozzi, Saxo Bank senior fixed income strategist, will give us her perspective on the market implications of all of this. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Robert Blackwell, CFR Senior Fellow and former advisor to President Bush. This is Bloomberg.
Because of the sanctions, holders of these dollar bonds won't receive dollars, they'll receive rubles. And even if it's the same valuation, that's not what holders have signed up for.
All right, that was ING strategist Porrick Garvey speaking to me yesterday, and he hit on one of the key points that we don't yet entirely understand. We know that the funds earmarked for interest payments on the Russian government's dollar notes were sent to the payment agent. At least that's what Bloomberg is reporting. Bondholders are still waiting to receive the money, the amount, $117 million. We're not entirely clear on whether those funds were sent in rubles or in dollars. Bloomberg managing editor for credit, Dana Al-Baltaji, joins us now to talk about this. We're following it very closely. How important is this, Dana?
This is very important because we are now in a new phase with Russia. We are starting to see how it will be communicating with investors worldwide. You know, I mean, ever since the start of the war, we were always wondering to see whether or not it would honor those contracts, and it's basically saying that they want to, but we actually don't know if the rules will allow it to. So there's a lot of confusion here. We don't know if the cash has been moved or not. The bondholders are saying no. So we're still actually waiting.
So we've traced the money then, Dana, from Russia to JP Morgan to Citi, and we're waiting for it to get into the sort of pipe, the networks, the clearing houses, and then get to the end recipients. Clarify if you know what currency it's been paid in. I think one colleague pointed to dollars earlier on, but we should get some clarity on that. What kind of a backdrop does this give to payments of this nature in the future? I mean, how much concern is there going to be that any of this money is going to be paid, or even if this is paid, money is going to continue to be paid in the future?
Well, that's exactly it. I mean, first, on your first question of whether or not it's dollars or rubles, the finance ministry didn't actually specify for this one if it is, but they did say earlier in the week that the process will be that they will try to pay it in dollars, and if that does not work out, then they will pay it in rubles. So the assumption is that this actual transfer is in dollars, but we don't have that for sure. Now, on the way it will be seen in the future, like let's say if this one is paid, it doesn't necessarily mean that the next payment will actually be paid.
Corporate debt could be different to sovereign debt.
Exactly. So every single payment is letting us know the sort of relationship that investors will have with Russia from now on.
Yeah, interesting to see the role that US banks want to and can play in all of this, and where exactly all of the sanctions take effect. Dana, thank you very much for joining us. Dana Al-Baltaji joining us there with the latest on the Russian debt story. Now joining us is Althea Spinozzi, Senior Fixed Income Strategist at Saxo Bank. Althea, thank you very much for your time. And I want to ask you about Russian debt, but specifically on that, if you want to weigh in on that subject, but more broadly perhaps on any kind of spillover effects that you would expect to see from non-payment of Russian debt, if that is how this ends up. We don't know yet whether this debt is entirely going to be paid, and indeed in what currency. But what kind of knock-on impact would it have to wider markets?
Well, what happens, Anna, is that right now we are hearing a lot of noises from the market, and nobody's really sure what's happening next. But really, the only certainty that we have is that the longer the sanctions are going to be imposed, the higher the possibility of the default in Russian debt, not maybe now, but in the future. And the biggest problem with that and the biggest question for investors is if there is a default, how the CDS is going to pay bondholders. Because when the CDS pays bondholders on a default, it has to auction defaulted debt. But there is no market right now for Russian bonds, and nobody can bid for them. So the big question here is how they are going to calculate the amount of money that they need to transfer to the bondholders in case Russia default.
It's concerning, Althea, because this is precisely the reason that some people buy credit default swaps, right? You're buying insurance in case of a default, and if that's clearly coming, don't the sellers of credit default swaps have to get ready to pay out?
Absolutely, but that process implies the auction of the defaulted bonds, which in this case are not biddable. So the big question is how bondholders are going to receive this money, if there is going to be an outside evaluation, if these bonds are going to be valued to zero. Nobody knows that, but that's obviously a topic that is going to be tackled down the line once that we have a default. Right now, what is important is to understand whether this coupon, the one that was due on Wednesday, is going to be paid or not.
Althea, do we talk too much about this or not enough? And I guess, I mean, is this going to be, is there any systemic story here, or is this too small? Some people cast their minds back to LTCM and say, you know, that business had to be backstopped, so that had to be bailed out because of exposures that only became clear after defaults. And they think that maybe something like that could be hiding in the weeds here. Are you concerned because of spillover effects around Russia?
Definitely, there could be some spillovers, but the biggest risk is run by Russia itself, because at this point in time, a default means that Russia in the future will have serious problems to finance its debt, refinance its debt, or even access the international bond market. The big problem in our system is the banking system and how it's going to react, all those investors holding on Russian bonds, and also the issuers of CDS. However, right now, we don't even have a clear picture of how that systemic it could be.
All right, Althea, thanks so much for joining us. Pleasure having you on the program. Althea Spinozzi there is Senior Fixed Income Strategist over at Saxo Bank, talking us through this very complicated Russian default story. Now, former Goldman Sachs bond trader Dan Morehead is betting big on Bitcoin. Morehead is now the head of crypto hedge fund Pantera Capital. He discussed his outlook on crypto with me yesterday.
Within the next 5 or 10 years, almost everyone with a smartphone will use cryptocurrencies. And if that's true, they're going to be at a much higher price.
Bitcoin feels like it's been stuck at 40,000 for 6 months already. Is it going to be, you know, 400,000 in 2025?
I think it actually will be some number like that.
For more on the world of decentralized finance, you can watch our new show, Bloomberg Crypto. It airs every Tuesday at 1 p.m. New York time. We had Michael Novogratz on last week, and every Tuesday we'll have new guests on that live program, 1 p.m. time Tuesdays. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, today is the deadline for bids to come in for Chelsea Football Club. So here in the UK, of course, the sanctions situation of Roman Abramovich, the owner of Chelsea Football Club, means that that has to be sold. We could see 30 bidders coming in today, Matt. So if anyone watching has a spare $4 billion and they're thinking of bidding, today is the deadline they need to be aware of.
Does do none of these oligarchs want to appeal these sanctions? I mean, I wonder on what grounds the UK just decides they'll take their property.
There was a lot of paperwork that went along with it, and certainly the UK government wants this done and dusted quickly. We'll wait to see where the bids come from. Hedge fund managers, US baseball club owners, football club owners, all could be in the mix.
All right, well, very interesting stuff. We'll continue to watch Trafford Bridge.
And other stadia are available. More Bloomberg Surveillance is ahead. This is Bloomberg.